All right, good morning, good afternoon, good evening. We're about a minute before the news on the 26th of April. We got some events overnight from the Bank of Japan that rocked the world in general. Uh, Ended up triggering my euro into a hedge, and I ended up having to close that hedge this morning after the PCE results. So we'll get to that here in a minute. I just want to see these numbers come through. Couple seconds. Crazy week it's been. TGIF. Come on, news. Just waiting for this. There you go.
76, lower than forecast 77.1, and conditions at 79.79, lower than forecast 79.1.
Awesome,
Noticing
awesome.
some slight strength in the dollar following this. Again, noteworthy US University of Michigan 1-year inflation final coming in slightly higher than expected.
All right, so I still have 8 trades remaining from yesterday. I do have a hedge. Oops, sorry. I do have a hedge to replace the one that I got rid of earlier. If we go and take a peek at what happened yesterday, this is where we traded as a group. I I put a hedge right up at the top of the wick, and then I went for a nap.
We have posted out the University of Michigan April final report on.
I closed my eyes for what I thought would be 2 minutes, and I ended up sleeping for about 2.5 hours. And so, lo and behold, uh, I got triggered into the hedge, and I ended up having to close it at a loss. So that cost me 11 pips on 1.75 lots. So that cost me about $200. But that $200 loss actually ended up protecting everything I had built the day before. And so it cost me $200 in insurance to save maybe a couple $1,000 worth of work. And so, having to survive this cost me 200 bucks. And now I'm back in the game as if nothing happened. And I basically recuperated that loss. If I go and check my current week, my biggest loss was that hedge trade, $211. That was one of 7 losers this week. So it's still manageable, right? It's okay to lose. It's okay to plan on the recovery of that loss one trade at a time, like this, right? It doesn't have to be one big fat recovery. And that's kind of the aim of the game, right? While we're hedged, all we're doing is pausing the drawdown. And so we paused the drawdown overnight, my overnight. I dealt with it with the PCE news. I had an opportunity, I had a chance to close it with a little bit of profit, but I was kind of lazy and I did not put the target at break even. I figured, oh, I'll deal with it manually, and manually cost me 200 bucks. Right? I would have been better off just putting the break even on the hedge right at the hedge and letting it get taken out. But lo and behold, I did it manually and I paid the consequence. Right? So all the news is out. Let's go take a peek at the daily. Let me remove this. All right, so if you look at the daily chart, all we've done for this week is fulfill this channel. And if you refer to, the best technical analysis book that there is out there, it will tell you this is a halfway pattern. And oops, sorry, that's too big. And as a halfway pattern, it would make sense that we go and revisit. It would make sense that we go and revisit. Oh, come on. What's with my mouse? There we go. The flagpole, right? So in this area here, in the 500s, right? So let's go and visit the 500s. Right? Let's see. This is more than likely the real move, right? 575 to start with, and then anything below that. Okay, so let's look at that. Higher high, higher low, red candle, so we're coming off of the high. On an hourly scale, we have what's called an overthrow, or it's like a false break, which tends to indicate the real break will take place over here. Right, so that adds premise to this move. It adds to this. And so let's just take a peek on the 5-minute scale. And then here you can start to highlight what you think the market will be attempting. Right, so you have your ceiling, you have your floor. We already know our bias is tilting to the downside. And so we're aware that selling green candles will be to our advantage. And that's the name of the game for today. Right? I'm just looking to my left to see if and when and where the price might be able to revisit. Right? And so this so-called ladder, it's just a decision tree, right? It helps you decide if you're going to participate or not, right? It helps you think ahead. What will you do if it gets here? Maybe the answer is nothing. You still have an idea. At least you've thought of it. You thought about it. So I'm just looking to my left to see where I can find these little shelf, these little areas where the price is happy to be for a few minutes at a time. Nothing complicated. Right? Surviving over the past 24 hours was the name of the game. And someone asked yesterday, would I be better off taking losses or hedge? And I said, oh, I'll probably just take the loss because I don't feel like fighting with this. What I ended up doing is putting a hedge right there, realizing that it may or may not get triggered. It did not get triggered until 1 in the morning, my time, 2 in the morning, my time. And so I fell asleep. I closed my eyes. I missed a couple of lessons. I must have needed the rest. So here we are now, trading the same bias 24 hours later. Right? And we understand what the market is capable of doing on average. The PCE was the clincher, right? This is what the market was waiting for pretty much all week. All right, so I lost right there. But otherwise, if we go take a peek at the entire week, we did not do so bad this week. Right? This is our week of work. All right, success pretty much every day, couple of losses, 7 in total, one of which was the most expensive right there. Right? But the rest is par for the game. This is a normal environment for what we're doing here. And because we show up on schedule, we tend to yield a potential average that you can call your paycheck. And then you leave the casino with your paycheck. I find myself over trading or forward testing the strategy all day long. And so I end up pickling myself. I put myself into a pickle more often than not because I'm here in the low volatility times. You guys are expected to walk away, right? Walk away with your winnings. At some point, you're going to do what I'm doing here, right? You're going to find yourself forward testing your strategy. But this is it. For the time being, commit to working a couple hours per day and walking away. Right? That's risk management. And then once you have the discipline, learning to lose and walking away, this forward testing becomes the next natural step in the evolution. Right? Learning to mitigate problems. And this is what we do. All right, so back to our 1 minute. I'm now left with 8 trades. With any kind of luck, I'll be closing these 8 trades in the next little while, and my book will be flat for Friday. And the account will have moved up. And so before I was doing this, when I woke up at about 5 o'clock this morning, about 3 hours ago. Before trading Forex, I was looking at my futures account and I traded on futures for a little bit. Plot execution. So I traded here. I traded this little dip right there. And for a total of $6,000. Right, so I made a day of work in about 30 minutes, 40 minutes. Forex is, it's not the means to the end. It's just a teaching tool, right? It's so granular. It allows you to learn how to manage risk, with dimes and nickels. This is now allowing you to make money once you have the skills, right? It's evolution again, right? The next step. All right. I did it all backwards. I started years and years and years ago, lost a fortune trying to learn to trade options. And then, I figured futures must be the next best thing. So I lost another fortune in futures. And finally, I got my poop in a group learning Forex because it allows you to lose 10 cents. Right? And so it's learning to lose, and you have to do so as small as possible and learn to grow into that environment. And this is so counterintuitive. It's so backwards to what society has us focusing on. We're not prepared for this. And so in this environment here, they give you leverage, and the leverage is a tool. And a lot of people misuse leverage. What we do is use leverage to tune our size, right? So the size of our trades is adjusted because of leverage, right? If I have 100 to 1, which I do in this account, I'm given the opportunity to trade 0.01 lots, right? So it's a balancing act, and I get to balance how much risk I'm willing to take, right? 10 cents, a dollar, $10, as opposed to trading futures where I'm risking 1,000, 2,000, 4,000, 10,000, right? It's a very different environment with a very different outcome, same skills, right? So here is the best place to learn. And with this environment, the control is what you're learning to exploit, right? Most people surrender control with every click of their mouse. They're waiting for the market to tell them, hey, you lost, or hey, you won. What if you maintain that control and you engineer the exit that you require? Right? So you took a trade with an exit in mind, and if the market has something else in store for you, you can counteract, you can intervene, you can do what you need to do to get the outcome that is better for you than what the market has in store, right? So it's this engineering, it's keeping one up on the market, right? You're always thinking about that next move, like a chess player. It's like Wayne Gretzky used to play hockey, right? So we're going down the ladder. We have been going down the ladder since the PCE. Ultimately, our target for the day would be average or slightly more. What is today so far? Today so far is 50. Our average remains 64 like it has been all week. So we have room to roam, right? We have room to go lower. And keeping this as a halfway pattern, we understand there's a possibility that we can go a lot further down in time, right? It's not going to be the same amount of bars. This flagpole here is just pointing to a destination, right? It's not pointing to an amount of time. And so we have a target in this vicinity, but it could take us, weeks to get there. All right, so this gives us an idea for the future. Every day we're going to come in and reassess that idea based on facts, floor, ceilings, that kind of stuff. And the facts will lead us to trading a couple hours per day. All right, so I've not taken very many clicks so far. I've been explaining myself pretty much all morning. If you get a chance to, sell on green. You still have 2 boxes to go. Right? Measured move tells us we're missing about 20 pips to the average. So let's fulfill the average. I'll put a couple trades right here. I'm bringing up my average. There you go. I put all my trades in right now. All the trades I'm afforded to take, I just put them all in. You notice how I brought the average up, right? And so all I'm trying to do is book my way out of here, basically as fast as possible. Come on. I need to replace the batteries in my mouse, man. I've been grieving over this all week. All right, so all I want to do is break that little white line right there, and I can just flatten everything, right? I'm floating $30, $29.85 out of a $12,000 account. And it's Friday morning. I've already made the money that I need to make for the week, and so I'm kind of itching to get out of here. Come on, come on, come on, come on, come on, come on. The overnight move on the yen probably rattled a few cages. It rattled all the currencies. If we go and check, let's go check the majors. Right, because of that yen event, we had that reaction there, that big wick, and that kind of imploded thereafter. Boom, it took off. That's a tremendous move for that pair. damaged a lot of people, right? Right here, right there. That same wick is on all the yen pairs, and if you're an overnight trader expecting low, boring, monotone, yesterday was quite contrary. Let's see our Dixie. Okay, so as of today's news, our Dixie is back to the moving average. This happens to be a 50 and a 200 on the 4-hour chart. And that's just for reference. This is what institutional traders are looking at. All right, and then when we look today specifically, is value date, right? So from an institutional point of view, this is the last day that they have to spend money and have it count for the month of April, right? It takes 2 days for settlement, and so we refer to this as value date, right? So on a corporate level, on an institutional level, this is their last day for April to do a deal. And so you'll see typically bigger moves than the average on this particular day. And this is what's happening in front of us. Right, so here we are. I'm in the green. There, I just closed everything from yesterday. These are the last trades from yesterday. That was 4 losses right there. Done. Let's go to 5 minutes and take a picture of this. All right. And so for the month of May, I'm thinking of running futures on Tuesdays and Thursdays. All right, so instead of just Wednesday nights, I'll be doing it Tuesday and Thursday at 9:30 Eastern. Okay, so we're gonna double it up and give us more time together. All right, and so we'll cover it all. We'll cover both ends of the spectrum. We'll keep doing Forex in the morning. Maybe I'll introduce futures in the morning once in a while, and I can introduce Forex in the evening once in a while. And so, we can tap it all. Here we are. I did not have to book losses. Right? That's okay. There's nothing wrong with, taking risk off the table. That's the best part of this business. It's almost impossible to feel guilty for something. Just create an alternative plan. There's a lot of people that are good at this, alternative facts. We don't look for alternative facts, but we do create alternative outcomes, right? Possible alternates. All right, so this is it, friends. This is a 23-minute trading session. If you're still in the game trading, sell green candles, right? Sell expensive. And don't think of doing this into the South Pole, right? Don't think of doing this all at once today. All right, so eventually we will find support today. Eventually we will stop going down today and we will bounce. And that's the catch, right? Anybody that falls for this, that's no fear of missing out, is going to be selling at the worst possible time. And we know because of time of day, there's a bounce coming, and we can take part in that bounce, exploit the bounce for the eventual next move, right? So if it's bouncing, it may bounce 4 boxes worth. It may, doesn't mean it will, but it may. Right? It may go all the way back to here, 36 pips. And I'd be a seller for those 4 boxes, right? So we want to be selling green candles as it pushes up. Just like I did here, 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 here. Right? Keep selling green candles. right there. And then eventually you'll make your money here. All right. And that's it, folks. I'll see you guys Monday. Enjoy your weekend. If you're going to keep trading, trade safe, trade small, be diligent. Enjoy yourselves. Bye-bye.